Hey, I was sneaking in a text message and I didn't get it out. Welcome to another weekly market update with Kristen Mason Coreas. Today is May 28th, and we're here to talk about what is happening in real estate. We start by taking a look at what's happening nationally, and then we always end with a hyper look at the hyper local market, Arlington, Alexandria, Fairfax, and Falls Church. So make sure you stick around to the end to hear that stuff. And please share with other people who might be interested in this as well. Oh, or give me feedback. Feedback would be great. Sometimes I feel like I'm just talking into a void. I know some of you out there are watching, but interest rates is where we always start. So interest rates are up a touch from last week, but down from last year, down 0.36. So for perspective, 6.53 is the average for a 30-year fixed conventional loan, and that is a little bit higher than our year-long average. We've been as low as just below 6%. We have been almost at 7%, so a little bit higher than 6.36, which is that average in the past year. Last year at this time it was 6.89, so that is better for sure. We had come down to the low sixes and had come up, so buyer activity has been fluctuating a bit, I would say, perhaps in relation to some uncertainty and some fluctuations in the interest rate. Generally, we've been relatively stable for sure, staying in the mid sixes. Like, we haven't been really above the mid sixes for a while. So mid to low sixes is where we've been. But low sixes is definitely better than mid sixes. So there you go. National economic news, applications for unemployment benefits did rise slightly last week. However, it's considered a stable labor market. These are reports from I actually don't know who this comes from. Sorry, I get this data from lenders. So the labor data, I just do always take with a grain of salt, because I have heard that this information is not always 100% accurate. In regards to inflation, we are higher than the Fed's target rate of 2%. So the Fed would like to see inflation no higher than 2% in order to maintain their course. And so we are at 3.8%. And so that may mean the Fed may respond by increasing their interest rate. So we will see what happens there. Final gross domestic product came in softer than expected, falling from what was expected at 2% down to 1.6%. So less domestic products sold overall. And that may be because, economically things are a little bit tight for the average person out here. And new home sales were lower than forecast in April. So that is tied to the new home supply has increased to 9.4 months. 6 months is considered relatively stable. So 9.4 months of inventory is on the high side for new homes. So we may see some less of that. You may actually see prices there perhaps increase, or incentives increase in the new home market. And despite mortgage rates moving higher recently, actually mortgage applications, this data comes from the mortgage industry. Applications to purchase a home were up 0.4%. That's not a lot for the week, and 5% higher than a year ago. Again, when you looked at that interest rate from a year ago, that was a significant difference. It was like 6.8, right, compared to 6.5. So 5% higher than last year at that interest rate. And in the Mid-Atlantic region, which includes Virginia, DC, Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey, say that 5 times fast, contracts have been consistently above, I need to sneeze, 2025. For the 6th straight week in a row, we have been higher than the year before. However, footnote that there is variation across the local markets, which is why I do like to look at the big picture, and it's also very important to narrow into the local and hyperlocal picture as well. So keep that in mind whenever you are hearing and listening to national news or national data about the housing market. It may not always apply where you live. The market pace is holding steady in terms of time to contract. So that really has been staying here right around 20 days, and actually 21. And that's actually our hyperlocal market. Actually, we're right at 20 days. So we do still have a generally fast moving market where homes don't tend to stay on the market much longer than that. So buyers have some time to think, but not a ton of time to pause, or homes will be gone. New listings continue to increase. There's a 4.2% increase in new listings compared to the same week last year. And for the third week in a row, we're seeing year-over-year increases in new listings, which then may contribute to higher inventory overall if buyer activity decreases, but that data is not shared there. For the DC metro area, now this is for the week ending May 24th, so that would be Sunday of Memorial Day weekend. So it's going to capture some of Memorial Day weekend, but not, I mean, I guess a large part of Memorial, it doesn't capture Monday of Memorial Day weekend. So most activity in real estate does tend to happen over the weekends. So this will capture a lot of that holiday weekend activity. So therefore, we see that showings were down 21.6% week over week. That's because of the holiday. Now, last year, Memorial Day was the same weekend. So compared to last year, also Memorial Day weekend, we are also down 5.2% in showings. Purchase contracts essentially flat, down just a touch compared to last year and compared to last week. So that's impressive that actually on a Memorial Day weekend, purchase contracts didn't really go down significantly. They stayed essentially flat. Time to contract here, you can see it's 24 days is the median, not the average. Down 1 day compared to a year ago, shorter by 2 days compared to last week. New listings have increased year over year by 4.8% and decreased compared to a non-holiday week by 15.2%. Median list price down year over year by 1.3% and down 2.2% week over week. Active listings up almost 8% compared to last year and down 2.1% compared to last week. And then our hyper-local market that we run for you at Homes by Mason, which takes a look at Arlington, Alexandria, Fairfax, and Falls Church, where we do most of our business at Homes by Mason. So you can see that this is the raw numbers in terms of new listings and new under contracts week over week. We have a lot fewer. Actually, you'll see the number, I think it's about 50%, 55% less new listings this week compared to the prior week, and this does go all the way through the weekend. So all the way through Memorial Day compared to the same time frame last year. Under contracts were less as well, but here, this hasn't happened, I don't think, at all this year. This is the first time you're going to see our demand to supply ratio is actually above 100%, because what happened was there were more contracts than new listings this past week, which is interesting to see. So week over week data, again, this just shows you how much. So we were down, again, about 55% week over week in terms of supply, also down in contracts week over week by not as much. And then this is the year over year data. So we are down in our hyperlocal market in inventory compared to last year and down slightly in contracts compared to last year. But the demand to supply ratio, so I told you, this is the first time this year. So back here in, when was this? January, it looks like, end of January. We're almost at 100% demand to supply ratio, but this is the first time all year we actually saw more contracts written than new listings come on the market. Very interesting that the buyers were still out this past weekend. Good to know. And so last year at the same week, it was 92% demand to supply ratio. So not too different. The peak of the market tends to be around now, actually. So we may actually be seeing here perhaps a delay in the peak. I actually a couple of weeks ago said that I thought we had passed the peak, but this data here makes me think that maybe the buyers are going to stick around for a little bit longer further into the year. I hope so, because we have a listing coming on the market next week. So we'd love to have lots of buyer activity next week and next weekend. And so that brings us to, oops, what happened here? Is that the same chart? What is this chart? This chart looks different. No, it's just it's sorry. That's just a repeated. Oh, we're missing the days on market. That's what's missing here. Apologies. So this is supposed to be the days on market chart. We are still at 20 days. So I did look at that earlier. 20 days average days on market in our hyper local market, as it's been for about 2 weeks now, I think. So that is your weekly market update with Kristen Mason Coreas, owner of the Homestead Mason team. I geek out on this stuff if you haven't heard or figured that out. So anytime you want to talk about data and dig into it a little bit more and certainly look at how it may impact you and your decisions that you need to make about real estate, please reach out. You can call me or text me at 571-210-1866. You can email me at kristen@homesteadmason.com or check out the website, which has some more data. It's got monthly data reports there and also some helpful resources for buyers and sellers, homesteadmason.com. Thanks for watching and have a great weekend.